This is second video of our channel Smart Investment Tips by Dr. Anandan. First video I have discussed about the fundamentals of investment. Those who missed the first video, subscribe this video, then you can see first video also easily. This video I am going to discuss about the how to invest in mutual funds and details about the types, tax, choice and methods of investment in mutual funds. Now we go to video. This is second video of our channel Smart Investment Tips by Dr. Anandan. In this second video, we are going to discuss about how to invest in mutual funds. Mutual fund முதலீடு பற்றி விளக்கமாக பார்த்துடலாம். It is not intended as investment advice or recommendation to buy, sell any finance instruments. Please consult a certified finance advisor before making any investment decisions. Now, what is mutual funds? A pool of money collected from investors to invest in stocks, bonds and other assets managed by professional fund managers. India's mutual fund asset crosses 72 lakh crore. Total AUM is 72.18 lakh crore as on May 2025. It is growing year on year 22.5%. Equity fund share out of this is 60% of AUM. Investor base over 15 crore folios. Key benefits of mutual funds. What are the benefits of investing in mutual funds? Diversification of investments. Managed by professionals. SIP option makes it easy to invest monthly. Liquidity. Easy to buy or sell. Anytime you can buy or sell. Risk having some risk also. Market volatility risk, interest rate risk and credit rate risk. These both are in debt fund mostly. No guaranteed return. Types of mutual fund. What are the types of mutual fund? Grossly equity funds. Higher risk, higher return. Debt funds. Lower risk, stable return. Hybrid fund, mix of both. Multi-asset fund. We can discuss one by one. Equity funds, diversified equity funds, index funds, sectoral or thematic funds, ELSS. There is a subclassification. We will discuss about individually. Diversified equity funds. This large cap funds invest in top 100 companies. Mid cap fund invest in 100 to 250 companies. Small cap funds invest top 250 out of top 250 companies. Multi-cap fund, minimum 25% investment in large cap, mid cap and small cap each. Flexi-cap fund, minimum 60% equity, no other conditions apply. There are some other funds, value funds and contra funds. They are equipped by value stocks. Index funds. Index funds invest in stocks in index same weightage. This is passive investment. Move at par with corresponding index. Advantage is expense ratio is less. For example, Nifty 50 index fund, Nifty 100 index fund, Nifty 500 index fund, Sensex 30 index fund. Another sectoral or thematic fund. Funds investing in particular sector only. More risk than diversified funds. Examples are technology funds, healthcare or pharma funds, infrastructure funds, energy funds, financial sector funds and many more. And come to ELSS. This tax saving mutual funds, tax saving under 80C, lock-in period for 3 years, useful for those who want to save money in old regimen of Income Tax Act. Debt mutual fund. This low risk, stable return, invest in government bonds, RBI bonds, private company deposits, money market instruments, useful for short-term investments, substitute for bank deposits. Examples are overnight funds, liquid funds, money market funds, low duration funds, short duration funds, medium duration funds, long duration funds, and corporate bond funds and many more. Hybrid fund, previously called balance funds, invest in both shares and bonds. That also aggressive hybrid fund. That means minimum investment in shares. So tax at par with the equity fund. Conservative hybrid funds. Equity allotment usually less than 50%. Balanced advantage fund. Dynamic asset allocation depends upon the market conditions. Then other fund, arbitrage fund and equity saving funds. These are the types of hybrid funds. Then come to multi-asset funds. They'll invest in other asset classes also for more diversification. They'll invest in shares and bonds and also in gold, silver and real estate. Breakup of AUM by category. Equity funds as on date is 59% equity, debt fund 28%, hybrid fund 10%, passive ETF or index fund that is 8%, others is 2%. How to start invest in mutual funds? Now you are ready to invest in mutual fund. How to do it? Complete KYC. Know your customer by online or offline. Choose a reliable platform. Regular fund or direct. Regular, you invest via an advisor. Direct, you have to go for mutual fund app or mutual fund website. You decide between SIP or lump sum allotment. Track performance regularly. Come to lump sum investment. One time big investment, minimum 5,000, no maximum limit. Cut-off time is 3 p.m. for same day NAV. It is good for debt mutual fund. In equity funds, only for experienced investor or when market is low. Otherwise, for retail investor, lump sum is not advisable. SIP, Systematic Investment Plan. This is advice to all. It is regular, disciplined investing. Concept of rupee cost averaging with SIPs. SIP works with overtime. Monthly fixed date. You can get auto pay mandate to bank. Specific years like 5 years, 10 years like that. Or you can give until further instruction. You can stop anytime with 1 month notice. It is ideal for long-term investment. Minimum investment Rs 500 per month. No maximum limit. Risk, return and duration. Equity fund, high risk, high return. It is advisable for long-term investment. Debt fund, low risk, stable income for short-term investment. Hybrid fund, balanced or medium-term, medium risk. So before investing, know about the following. AUM, Asset Under Management. Whole scheme, bigger the asset is better. NAV, Net Asset Value, price per unit of fund. It changes daily based on the market value of assets. Units will be increased when we invest more. Our asset, we can calculate NAV into number of units we are having. And also know about following. Fund manager is track recording. Each fund having one fund manager. He assesses about track recording as his experience. Consistent performance and experience matter. Exit load. Any fee for withdrawing early. 1% for equity funds if you withdraw within a year. Lock-in period only for ELSS for 3 years. Expense ratio. Small fee charged by the fund house to manage your investments. Lower is better, especially for long-term compounding. Taxation rule. Equity funds. Long-term capital gain tax after 1 year is 1.25 lakhs. Above that, you have to pay tax. Debt fund, tax as per income tax slab. Detail about the income tax about the equity mutual fund. At least for qualification, this tax is given. The fund house should invest at least 50-60% of its asset in equity. And it is divided into short term and long term. If you sell unit within 12 months, it is short term. More than 12 months, it is short term. Short term capital gain tax is 20%. Long term capital gain tax is at 12% of gain exceeding 1.25 lakhs in a finance year. That means in equity mutual fund, long term capital gain tax up to 1.25 lakhs is free. Above that, you have to pay 12.5 income tax. Debt mutual fund after April 1, 2023, whatever may be short term, long term, you have to pay tax according to income tax slab rate. Now choose right fund for you. So many funds are available. Which fund you choose? Goal based on investing. Different fund types for specific financial goals. Long-term goals like retirement, children's education require equity funds. Short-term goals, if you want money in 2 years or 3 years, require debt funds. And also assess the risk tolerance or risk profile of individuals. They may be conservative, go for debt funds. Moderate, may go for balanced fund, hybrid fund like that. Aggressive, go for equity funds. Summary, takeaways. Start early with SIPs. Know your risk level. Choose one with good track record and low expense ratio. Stay invested for long term. Don't panic during market dips. For market குறைஞ்சிட்டு போகுது அப்படின்னு கவலைப்படவே வேண்டாம். You can get more units when market is low. Conclusion. Mutual funds are ideal for long-term investment. Help build wealth systematically. It is tax efficient also. Give inflation beat return. Choose wisely and review periodically. So thank you for watching. Like the video if you learned something new. Comment or ask question below. Share with colleagues and friends. Subscribe for weekly investment tips. Next video we are going to talk about stock market. This basics for mutual fund also. So subscribe this video so you can do next video also. Don't forget to like, share and ask any questions and subscribe the channel. Thank you for watching. We see you in next video. Thank you.